Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. This is where we sift through a whole stack of interesting sources, pull out the key nuggets, really, to give you that shortcut to being genuinely well-informed. And today, well, we're jumping right into a pretty big moment for the global crypto market.
Yeah, definitely seeing some movement.
Right. As of today, August 19th, 2025, Bitcoin's price took a dip, and it pulled the whole market down with it. We're looking at well below $4 trillion now, about $3.96 trillion specifically.
That's a noticeable drop.
It is. So the big question, the mystery we're trying to unpack, is what's really going on behind these moves. Because the sources we have offer some, well, pretty surprising connections.
And that's what's so fascinating here, isn't it? How fast sentiment shifts. But like you said, this isn't just about the crypto charts.
Well,
We're going to connect things that might seem totally separate. You know, global politics, deep crypto mechanics, even cutting-edge AI stuff.
Exactly. Our mission is to kind of untangle those threads for you, show those unexpected links, and help make sense of it all.
Yeah, hopefully helping you understand not just the what the price drop, but the why it matters, and how all these different forces are actually converging right now.
Okay, so let's unpack this. First surprising nugget, maybe. The source material I look at draws a really direct line between this crypto downturn and high-level world events.
Oh, interesting. Like what specifically?
It points directly to President Donald Trump's recent meetings.
Mm-hmm.
You know, with Ukrainian President Zelensky and also with some European leaders.
Okay, right. I saw mentions of those.
And the source claims, quite strongly actually, that the mainstream media narrative is, quote, completely different. And that this difference is what's creating temporary panic among investors.
Temporary panic. So they're linking media portrayal directly to market sentiment.
Directly. And they back it up with a number. A huge number, actually.
Yeah.
$318.3 million in crypto ETF outflows. just in the last 24 hours.
Wow, $318 million. That's significant. That's institutional money pulling back from crypto funds, basically.
Exactly. Presented as a direct reflection of that sentiment, that panic.
Okay, so if we connect that to the bigger picture then, the material frames Trump's goal here as actively seeking world peace between Russia and Ukraine. Is that the angle?
That seems to be the core argument presented, yes.
And it's important, the source makes this point, to differentiate between a full peace agreement and just, a ceasefire.
Right. What's the distinction they're making?
Well, the source suggests the focus is really on a long-term solid agreement, not just pausing the fighting temporarily.
Because of concerns about what happens later.
Exactly. Concerns that just a ceasefire might leave Ukraine exposed to future attacks, especially if there's a change in the U.S. administration down the line.
Okay, that makes sense. So a long-term view.
Yeah. And the analysis suggests that a potential big step, a key indicator, would be a trilateral meeting, Putin, Zelensky, and Trump all together.
Right.
The source believes that kind of meeting, if it happened, would make investor confidence just, quote, go off the chart.
Off the chart, meaning money flowing back in.
Big time. They speculate potential ETF inflows of over $2 billion if that meeting looks promising.
$2 billion. That's a massive swing from the outflows we just saw. What about a timeline? Is this imminent?
The source suggests maybe temper expectations slightly. They say it could take at least 2 to 3 weeks just for, concrete information to even start surfacing about this.
So watch this space, basically.
Pretty much. And they offer some advice on where to watch. They actually suggest avoiding the usual news channels, CNN, CNBC, Fox, for this specific info.
Oh, really? Why?
They argue you should go straight to the source, like official White House YouTube channels, for what they call unfiltered interviews, to get the direct perspective.
Interesting advice. So that's one perspective, a very geopolitically focused one, linking market moves to potential peace talks and media narratives. Quite a direct connection being drawn there.
It is. It really highlights how sensitive markets can be to these global political shifts, or even just the perception of them.
Definitely. But, is that the whole story according to our sources? Or are there other factors maybe closer to the crypto market itself? What about the sort of internal health of the market?
Yeah, that's a really crucial question. Because while geopolitics is presented as this big external push or pull, the sources also point to some fascinating signs of resilience within the crypto market itself.
Okay, like what? Despite the dip?
Exactly. Despite the downturn, despite those ETF outflows, one really key positive sign is how strong stablecoin volume has been.
Ah, stablecoins, right.
Yeah, the total crypto market volume was around $149 billion, but the volume for stablecoins specifically looked, quote, good.
And why is that significant? What does that tell us?
It suggests that people aren't necessarily fleeing crypto altogether, selling everything back into dollars or euros.
Okay.
Instead, they seem to be converting their, say, Bitcoin or Ethereum into stable coins. These are the coins pegged to things like the US dollar.
So it's like a holding pattern within crypto rather than a full exit.
Exactly. A strategic shift, maybe waiting things out rather than a panic sell-off into fiat. Looking at the big players in 24-hour volume, Tether USDT is way out front, like $118.5 billion.
Wow.
Then you've got Circle's USDC at $16.45 billion, and FTUSD around $9.8 billion. Significant volume there.
Okay, so less of a mass flight, more like moving funds to the digital sidelines, maybe? That's quite a different picture of sentiment.
It is, and it makes you ask, well, where is the activity happening then within crypto itself?
Right.
And we're seeing decentralized exchanges, DEXs, really pick up steam.
DEXs, right. Peer-to-peer trading, no central middleman.
Precisely. Their volume hit $17.69 billion. And interestingly, with pretty low transaction fees, only about $85 million total.
Yeah, that's quite efficient. What about TVL, total value locked? That's usually a key metric for DeFi health.
It is. It's currently at $147.3 billion. So yeah, it dipped just below that $150 billion mark. But context is key here. DX dominance within that TVL is almost half, 47.89%.
So nearly half the value locked in DeFi is on these decentralized platforms.
Yeah, though the source adds a little caveat, maybe 30-35% of that DEX volume might still be, influenced by or routed through centralized players somehow. Still, it shows strong decentralized activity.
Got it. And any other areas seeing growth?
Well, real-world assets, RWA, that TVL is growing steadily. It's at $14.59 billion now. That's tokenizing things like real estate or bonds on the blockchain.
Okay. And just for context, remind us of the big players' stats.
Sure. Bitcoin's market cap is holding around $2.29 trillion. Its dominance is about 58%.
Yeah.
Ethereum's cap is $511 billion, dominance around 13%. XRP price was mentioned at $2.99.
Right.
And another interesting angle is the interest from what the source calls treasury firms in proof-of-stake coins.
Like Ethereum.
Ethereum's the biggest, yeah, but also Binance's BNB at $116 billion market cap, Solana at $97 billion, Cardano $33 billion, Tron $32 billion. These firms seem keen.
And what are they doing with these coins? Just holding them?
Well, that's the interesting part. The material calls it a double whammy.
A double whammy.
They're apparently buying coins like Ethereum to hold on their balance sheets, as an asset. But then they're also using that same Ethereum to become network validators.
So staking it to help secure the network and earn rewards.
Exactly. So they get the potential asset appreciation and generate yield from staking. It's quite a strategy.
That is a pretty clever double dip, you could say. But does the source mention risks or how sustainable that is? Seems like a big commitment.
It doesn't dive deep into the risks of that specific strategy, no. But it definitely sets the stage for the broader context these firms operate in, which is, regulation.
Ah, yes. The ever-present topic of regulation. What's new there?
Well, a couple of big things. First, on the innovation side may be a sign of changing tides. The resurgence of SPACs, special purpose acquisition companies.
Oh, SPACs are back. I thought that trend had cooled off.
Seems like maybe not entirely. The source highlights Chamath Palihapitiya, describes him as an OG in Bitcoin.
Right, remember him.
He's filed to raise $250 million for a new SPAC. It's called American Exceptionalism Acquisition Corp, or AEXA.
Okay, and what's the focus for this SPAC?
It's targeting areas we've been talking about. Decentralized finance, DeFi, artificial intelligence, AI, and also defense tech. He's chairman, Stephen Trow is CEO.
What's surprising about that?
Well, the source points out that Palihapitiya had, not too long ago, basically declared crypto dead in America.
Oh, right, I remember that commentary. So this is a U-turn.
Seems like it. Now he apparently sees DeFi and stablecoins as inevitable. Quite a shift in tone.
Interesting. Okay, so that's one development. What else on the innovation or regulation front?
Let's look at Bitcoin mining quickly. The hash rate, basically the network's computing power, saw a bit of a pump up in early August. It rose 4% to 937 exashes per second.
That's a lot of computing power.
It is. And U.S.-listed miners now hold a record share of that globally, 3.6%. That's up 94% year on year, which is huge growth.
Wow, despite price dips.
Yeah, even though daily revenue for miners and the hash price dipped slightly, the overall market cap of mining firms grew 6% to $33.7 billion. Though its mixed TeraWulf gained 74%, Riot miners fell 16%.
Okay, so mining is still a major growing industry, particularly in the U.S. Now, what about actual laws? You mentioned regulation.
Right, the big one is stablecoin regulation and something called the Genius Act.
The Genius Act, okay.
The U.S. Department of Treasury has put out a request for public input. They want ideas on how to detect illicit crypto activity for what they're calling the nation's first major stablecoin law.
Public input. How long do people have?
There's a 60-day comment period open right now, and this whole thing raises that classic crypto dilemma, doesn't it?
Balancing privacy and security.
Exactly. How do you implement effective security, like KY Kamaler, without crushing the decentralized nature of things? There was some controversy mentioned.
Yeah.
Scott Besson apparently suggested using digital ID to spot illicit stuff, but that got pretty strong pushback from Bitcoin maximalists.
Why the pushback? What's the friction point there?
Well, the core issue, according to the source, is trying to apply traditional KYCML rules onto genuinely decentralized exchanges. It's technically hard and philosophically tricky for that community.
Right.
And the potential solutions, like using zero-knowledge proofs, that cool crypto tech that lets you prove something without revealing the data itself.
Yeah, I've heard of ZK proofs.
Right. Theoretically, they're great for privacy, but the source points out they're still ridiculously expensive to actually implement widely right now.
Practical challenges.
Okay.
What else does the source say about stablecoin rules?
It takes a really strong view on audits. It contrasts Tether USDT's early audits, calls one a laughable pie diagram, with Circle USDC's much more detailed, like 170-plus page report.
Quite a difference.
Yeah, the argument is basically, if these centralized issuers like Circle and Tether are going to act like banks, they need serious, comprehensive audits and regulations because they are literally replacing the role of bankers.
Makes sense. Does the Genius Act address this?
It seems to be heading that way for centralized issuers. But the source critiques the act for one specific thing. Apparently, it provides no room for algorithmic stablecoins.
The ones not backed by assets but by code, like Terra Luna, which collapsed spectacularly.
Exactly. The source actually disagrees with banning them entirely, despite the Terra Luna mess. They sort of hint that maybe lobbying influenced that decision.
Interesting angle. So the call to action here is...
Basically, if you, the listener, have bright ideas about balancing security and decentralization, or better ways to regulate stablecoins, the Treasury wants to hear them during this 60-day window.
Got it. Contribute feedback.
Yeah. And the source predicts that with clearer regulations, stablecoin volume will likely increase even more, maybe even leading to wider retail adoption in, say, 3 to 5 years, mainly because they offer instant settlement.
Okay, so regulation, while complex and controversial, could actually unlock more growth if done right. That's a key takeaway.
Seems to be the view presented, yeah.
All right, let's pivot completely now. From the intricacies of crypto finance and regulation to the world of artificial intelligence, and specifically some major moves happening in the Middle East.
Okay, AI. What's the news?
First up, from Abu Dhabi, a company called Core42, which is part of the larger G42 group, has added OpenAI's newest models to its cloud platform.
OpenAI models, which ones?
GPTOS 20B and GPTOS 120B. They're now available through Core42's Compass API.
Okay, and what's the significance of these models being available there?
The key thing is that they are open weight models.
Open weight, meaning?
Meaning more transparency. Companies can look inside, customize them more deeply, and choose how to deploy them locally on their own systems or in the cloud. The source says this really supports enterprise autonomy, gives businesses more control.
Right, that makes sense. More flexibility than using a closed black box model. And Core42, G42, they're big players in the region, aren't they?
Huge. The source calls them pioneers in AI, not just in Abu Dhabi, but globally. G42 has some massive infrastructure projects going on, too.
Like,
there's a big 5G US UAE campus initiative mentioned, and they're aiming for a 1 gigawatt data center facility in the UAE as part of their phase 1. Big ambitions.
wow. And wasn't there a big investment in G42 recently?
Yeah, good memory. Microsoft put in $1.5 billion back in 2020, a huge vote of confidence.
Definitely signals serious intent. Okay, so that's one major AI development. What's the other one from the region?
Also from Abu Dhabi. It's about the Mohammed bin Zayed University of Artificial Intelligence, MBZUAI.
Ah, yes, the dedicated AI university. Heard a lot about it.
Well, they just welcomed their largest cohort ever in 2025. 403 new students.
403 new AI students. That's quite an intake.
It is. And what's really telling isn't just the number, but the competition. They apparently got over 8,000 applications.
8,000 for 403 spots.
Yeah, an acceptance rate of only 5%. The source flags this as showing high competitiveness. It's clearly a sought-after place.
No kidding. What are they offering these students? What's new?
They've launched some new programs. An inaugural Bachelor of Science in AI, which is interesting.
A bachelor's specifically in AI.
Yeah, with tracks focusing on AI for business and AI for engineering. And the curriculum emphasizes not just the tech skills, but also leadership, entrepreneurship, real industry experience. Plus, they have masters in applied AI now, too.
Sounds comprehensive. And the university's reputation.
Already top tier, apparently. Ranked among the world's top AI universities for research and its credentials.
Impressive for a relatively new institution.
Very. And it all ties into the UAE's national strategy, something called GFI 2031, and building up Abu Dhabi's whole AI ecosystem.
So it's part of a bigger plan.
Definitely. They have this cool philosophy, too.
Yeah.
Students learned about AI, with AI, through AI, and for AI. Very meta.
Huh. Yeah, using AI to teach AI. Makes sense.
And they're innovating beyond teaching, too. They launched their own versions of data foundation models earlier in 2025, and even opened a lab out in Silicon Valley.
Wow, branching out to California. So
Right.
definitely a place to watch for anyone thinking about advanced AI degrees.
Absolutely. The source makes it sound like a very compelling option for masters or PhDs in the field. A real powerhouse emerging.
Okay, so we've covered a lot of ground here.
We really have. So what does this all mean when you put it together? We started with geopolitical whispers, potential peace talks impacting crypto prices.
And the debate around media narratives versus official sources.
Right. Then we dove into the crypto market itself, seeing resilience in stablecoins, growth in DXs, the return of figures like Palihapitiya to SPACs focused on DeFi and AI.
And that whole complex regulatory discussion around Stablecoins, the Genius Act, audits, KYC.
Exactly. And then we jumped quite literally across the globe to see these really ambitious AI initiatives taking shape in the UAE. Open models, a world-class AI university growing rapidly.
Yeah.
I think the core takeaway really is just how incredibly interconnected everything is now. Finance, tech, global politics. You can't really understand one without seeing how it bumps up against the others.
Absolutely. Understanding those connections feels more critical than ever if you want to be genuinely well-informed. Yeah.
Which, brings up maybe a final thought, a question for you, the listener, to mull over.
Okay.
Given everything we discussed, the sources' claims about, let's call it narrative influence on markets, the push for transparency and stablecoin audits, the different information sources, how do you personally filter information? How do you decide what to trust in this, well, really fast-moving digital world?
That is a really important question. How do you vet your sources, especially when the stakes, financial or otherwise, can be so high? Something definitely worth thinking about. We encourage you to keep doing your own deep dives into these trends and their implications. Thanks for joining us.
Yeah, thanks for tuning in.
Join us next time as we explore another set of fascinating currents shaping our world, right here on The Deep Dive.